So hello and welcome everyone again into today's class. Today's class is solely going to be based on how I take my entries and how I determine my risk on every single play and where do I sell most of the time and then how do I sell it and then especially if you're in the premium how you can follow the alerts so you can take the service this use the service better in the end, right? So most of you have now what I do is I give you guys a heads up that if I'm watching calls or if I'm watching puts, and then so you guys get that heads up, and then once I actually enter into a position, how do I manage the position up to the profit target? How do I scale out or scaling just in general? Right, and we'll talk about everything, but before that I will go over some of the trade recaps from last week and the week before. And if most of you I know had a hard time trading this massive downtrend, but we kind of saw this coming. We nailed this every single move on the way down. Even the small pumps we nailed to all the pre members in the group. They know you guys banked with me. So massive moves that we called literally every single move. And then this chop was also was pretty brutal chop, and everyone expected price to drop or even price to go higher after this massive dump. But this is not what I expected. I expected the price to go sideways after a massive 10% correction. So I adapted real quick, and then I was okay with 40-50% or even 70% gains on my positions. And then I was taking quick stops too on my positions too, because I know if price is in a range, then you just take what the markets give you, because you don't expect a big moves if price is stuck in that daily range. If you go in on the daily chart, right, you can clearly see there's market is really not going anywhere. If I take this highs and this highs right here, clear sideways action on the daily chart, and there's a range within range here. Last week was even brutal. Prices only in this, I think, 3 or 4 point range. So you have to be careful with this, with this type of price action, because what most traders think that most traders miss this move. Obviously, right? They just too scared to get in, and they're it's like, okay, I literally got a lot of messages saying Bull, how much the market can drop more. They were just, even the market was going down, some of you were just scared of buying puts, because it's like it's already down so much, it's been going down, but it's just kept going down. And now that most people missed this move, now they're expecting this move to continue in this direction, or most people expected this upside. So now there's blowing up accounts here, and then what's the next move is gonna be? The next is gonna be the same thing, right? Either we're gonna get to the upside, and then those people who blew their account in this chop of 2 weeks chop, maybe you get a chop of 1 more week or 2 after this chop ends. Most people gonna lose their portfolio. The most important thing is they're gonna lose their confidence of getting into a trade, and then they will trade once it actually starts breaking out or breaking down. Then then they will see it as a fake out too, then see it as a chop too, and then they'll sit out of the market. And then they will miss the big moves, and then the same thing's going to happen again. It's the vicious cycle. Price goes up, goes sideways again, and then goes up sideways again, right? So you need to understand, first of all, if price is in that within daily range, so my risk level is definitely going to be always prior swing highs and prior swing lows. If price is expanding, right, like here, we saw a clear fake out, range fake out right here, and this was the prior swing lows. So if there is a fake out of the swing highs, is going to obviously go to the next level of liquidity, which is going to be the swing lows right here. So in this move, I can definitely expect a range to expand, big moves to come, because this is where the most people's stops are. Anyone that who got long in this range here, their stop loss is here. So market is definitely going to go there to stop them out even before reversing, or we see a continuation pattern to downside. Right. So this is exactly what happened. This is what happens 100% of the time. So, in this scenario, you can definitely expect big moves, and then you can position yourself accordingly. So my strategy is, you guys, most I have posted so many trade recaps in there. At this point, you guys probably know how I trade, but I just want to quickly let you guys know, there are only two ways that you can actually get into get into any trade. I used to be a breakout trader, right? I do not take any breakout trades anymore. It's just I can't, just here and there. I would say if I take 100 trades, maybe only 10% of those trades will be breakout trades, right? But most of my trade comes from these two setups. So these two setups are, let me draw a quick line in the middle. So the first one is liquidity sweeps. So in this setup here, we have clear swing highs, and then we have clear swing lows, and then price is somewhere in the middle of prior swing highs and prior swing lows, and we do not take a trade unless we see a breach of either side, right? And now let's say this is our swing highs right here, and this is our swing lows. So in this scenario, I'm not trying to predict the market. This is how I goes. I'm just this is the mindset that it goes with every single day in the market. That I don't know where the price is going to move. I'm just going to wait for market to show me after the sweep where it actually wants to go. So after let's say first 15 minutes, or the any prior swing highs or low, I mark out on the chart. Either on daily chart or 15-minute or 1 minute, or on hourly chart. It does not matter. The thing is, most of the time, if we look at, this is a SPY chart, right? If we go into the hourly time frame right here, so in this chart, there's not, it's not actually hard to identify the swing highs and lows right here. So we have a swing highs right here, and this is a swing lows, swing highs, swing lows, swing highs, swing lows, and or like that, right? So it's not hard to find. So even if we go on a smaller time frame, these you will still find these swing highs or lows. So mark out these highs on the hourly, daily, or whatever chart that you are using, and then you can have a bias for the next day only after you see some sort of a sweep. So this is a daily chart. Let's not daily chart, any chart, hourly, 50-minute. So now price is in a range. Price is above the swing lows here, but below this prior swing high. So at this point, I'm not trying to predict anything, because I know this is a chop zone. Now this is where this is a sitting liquidity, and this is where the buy, this is the buy side liquidity right here. So if price wants to go lower, right? If price wants to move to the downside, what it would do is, instead of reversing right from here, first it would go to this swing highs. It will take out that liquidity. This is something I would say external range liquidity, because you can always find liquidity within liquidity. So this is a big range, but obviously there's gonna be swing highs and swing lows right here. This is going to be your internal range liquidity, right? So if sometimes price and never goes to swing highs and just reverses from here, it will reverse because there might be some sort of internal range liquidity. So here it's going to sweep that internal range liquidity, and it's going to continue the trend to the downside or to the upside, right? So for now, I'm just going to keep things simple. For now, is we're going to wait for price to sweep the liquidity on the upside, and then going to wait for a candle close. If let's say price wants to move higher, the candle will close above, and then we won't see any kind of sweep, and it will just then we'll see a continuation settlement. That'd be a breakout trade. I barely trade those setups. In my trading career of six plus years that I've been trading for full time for almost 5 years now, that what I noticed is most of the time the breakout trades is already too late, and then I would rather get in at the bottom and sell at the highs, because at here my risk is going to be too low comparing here, right? So let's say if my swing lows right here, I'm entering on the breakout on these prior swing highs. My risk is going to be so much at this lows. If price comes back down here, and the main thing is we trade options, and if you trade futures, your risk, you cannot take this big of a risk on your options play, especially on zero dates or on your futures too, if if you trade futures. So if anytime, if you want a low risk trades, just always take trades on prior swing highs or prior swing lows sweep. So I'm gonna wait for price to sweep the liquidity. Again, guys, it's not an you're not expecting a sweep. You're just waiting for it to happen, right? So even though I know this is where the sell side liquidity is, this is where price should reverse, but this is, I'm not going to expect it and going to place a trade right away, because the thing is we need confirmation. Say, this is the whole process. You always have to wait. The trading is just a waiting game, and then you have to wait. Now this is the first step is done, right? So this is what I was expecting for market to do, and then now it's doing it. Once the market has shown me what my expectations were, so now it's matching my expectations. Now the first part is done. The second part is you're gonna wait for price to form a downtrend. Use some sort of lower lows and lower highs. I call it a structure break point. You wait for SBP to happen. Now at that point, it's kind of confirmed that the trend has shifted. Now we have a risk level. The only thing, guys, that I wait for lower lows and lower highs to happen, because so I can get some sort of a risk level on my trade. If I take a trade right here on the sweep, I don't know where I would put my risk here at this point, because it could be this highs, could be this highs, it could be anywhere. But once I wait for lower lows and lower highs to happen, once it's confirmed, then I know this prior swing high is going to be my risk level right here. So now I can actually take a position on that sweep, right, or on a high value zone pullback after that. But your risk level is definitely going to be the same. The only reason that I wait for a pullback to happen, this is right here. Let me just make it more clean for you guys. Right. So this is, we wait for price to form lower lows and lower highs right here, and this is the SBP happened right here. Let me zoom in. Right, so this is the SBP happened. So now this is the confirmation that we got, and after this I wait for price to pull back. Sometimes I wait, sometimes I don't wait, right? Again, it all depends to your risk, right? Now I know, even if price pulls back here, my risk is going, it's going to stay the same. It's not going to change my risk, but I will just get a better entry in the end, right? So price cannot, the thing is price cannot go straight down here. You'd have to go lower lows and lower highs, and then on that high, somewhere in the high value zone, 38%, 50%, or 61.8. This is where I take my entries and I put my stop loss right around here. So now I would say the easy part is done. Anyone can press the buy or sell button. Anyone can buy the puts, or you can buy the buy calls. Using this strat is not hard to find, but the hardest part is to actually managing that trade after you pressing that buy button. And then how do I manage it? Is now my part one is clear. The second part is where price wants to move after it swept the liquidity of prior swing highs, right? As I mentioned earlier, there is going to be two types of liquidity zones: internal range liquidity, and there is an external range liquidity. So to keep it simple, so this is the prior swing lows right here. So I know if buyer wants to move higher, they need more people, and they need more money, they need more small money to pump back higher. So it's just not gonna reverse anywhere in the middle, from in this zone. So price is gonna travel back to this prior swing lows right here, and then if price wants to reverse from this bottom, then we'll see some sort of another sweep right here and another SBP on the a bullish SBP. I'm gonna take my entry again in here. I'm gonna put my stop loss at the bottom, and where it's gonna go next the same risk level that I used for my short position is going to be my target for my long position. Again, guys, that's how the price moves, right? Every single time, and that's how basically trade. Every single day. Most of the time, when I'm live trading, I give my members, a quick heads up. This is what can happen. This is swing lows and swing highs I'm watching, and price can sweep this liquidity, and price does that exactly because price needs liquidity to move in either direction. Once you understand that concept, then you will definitely have, after that, then you need to build that confidence that once I take my entry, price will go to my take profit level. Only then my trade will be mark completed. Let's say I take my entry here, and then I'm a 50% in the middle somewhere, and then I sold. That, I would say, even if you made money on the day, even if it was a nice trade for you, you made money, but you still did not follow your rules. You were still not disciplined enough to hold your trades until your target, got hit right here in this zone. And guys, this is the only reason I hold my trades to up 100%, 500%. I think in this downtrend, I think I lost count. I think there was more than 10 trades that I got, which were over 500%. Then, there were many trades that went over 1,000%. And the only reason that I held on to those trades is because I knew, the price, had to go to the prior swing lows or swing highs to move into the opposite direction. So now this concept is clear. So now, if you have any questions on this, please do let me know, and then I will show you, multiple examples on this. If you can, after this class ends, if you go to the trade recap section under which is, I think it's under the get access. Yes, if you go into the under the profits channel, it's a trade recap channel. You go, I have put together a lot of trade recaps in that channel, so you can actually learn from those too. Let me show you. Okay, so this was the first type, where I take my trade. This is I would say 70% of my trades. I use my liquidity sweeps, and then rest 20-25% is I use liquidity pockets. Which is okay status. But if you understand this, then you're gonna understand liquidity pockets concept too. So now let me quickly show you on the hourly chart how we nailed the top and how we nailed these small bottoms too in the price. So right here, so we had this swing highs on the hourly chart. How did I know the big move's gonna come? I didn't know. The market literally showed me step by step how it wants to move lower. So price is moving sideways, right? And then a lot of sideways movement. So we have our swing highs right here. This was a prior swing highs. This was swing highs. So this was swing highs I was watching, all-time highs. And we had this swing lows that I marked out. And we had over this swing lows that I marked out. So at this point, if there was any sort of liquidity sweep on the hourly time frame, I knew where it was going to go. It was going to go to the swing lows before moving higher. So I had two of these levels marked in my chart. I think I will share also when I will also share the chart, the real-time chart that I showed to the members on I think 18th Feb, that I'm expecting this move down after the sweep, and played out exactly. And then guys, remember what I said. You want to wait for some sort of a trend change. And the trend is going to change when price breaks below prior swing lows. Or in an uptrend, the trend is going to change if price breaks above the prior swing highs, or price makes swing highs, or when price makes higher highs and higher lows in an uptrend, or when price makes lower lows and lower highs in the downtrend. In this example, hourly closed above, and the movement the next day, market opened, massive dump in the first hour, and what did it do? It broke below this prior swing lows. That's a clear structure break point here. And if we go in a smaller time frame, let me go into 50-minute time frame. So now if we go in a 15 or even 5 minute, prices cannot move like this straight down. So you see we have our clear lower lows and lower highs formation, clear lower lows, lower highs, lower lows, and lower highs, right? And then price broke below this prior swing lows. Again, on the 5 minute, it's going to be the same level. My bad. And after this happened, on the hourly time frame, again, guys, you don't need multiple time frames to trade. Even you just keep it simple. Let's say on the 15-minute time frame, you will still find a lot of setups on it, because most of the time, if you just look at the bigger picture, if you just only take higher time frame swing lows or lows on the smaller time frame, it's going to be the same thing, and then you avoid these small levels. This is I wouldn't count this swing lows, this swing lows, as a valid one, because and I think market moves generally on the hourly time frames, on hourly sweeps or swing lows, right? So hourly, that's a clear hourly sweep right here, and now that is our confirmation that if bears hold this level, then the market can definitely go down, right? And then my next target is going to be this. We have this swing lows, we have over this whole range right here, yeah, and this is the ultimate target is going to be this 598. No one would have thought that price can actually go from 610 to 598, but we literally played this move live and then caught this move whole live. And then after this, all you have to do is just wait for price for a little bit of pullback, and then boom, price went to the downside. You see, guys, price here also made a new swing lows. That was also a confirmation that price wants to move low right here, and it pulled back into the high value zone. This is, I still remember this trade. It's a massive one right here, 50% and 61. Again, guys, it does not matter where you take the trade, in here, on here, your risk is going to be the same, up this highs. So one thing that you can, let's say if you are a scalper, or if you really want to keep your risk to the minimal, what you can actually do is not take a trade right away when price hits the high value zone, right? This would be, I would say, a little bit more advanced, I would say. But as soon as price tagged high value zone, most people take the trade. Again, guys, I have thousands and thousands of hours of chart time, so now I get that a little bit of sense if price actually wants to move lower or wants to move higher. But if you just want to keep it by the book, this is the one rule that you can add extra onto your list here, is as soon as price tags this high value zone, all you have to do is and then you go into even a smaller time frame, let's say 5 minute or even 1 minute time frame, and in 1 minute time frame you kind of look for same kind of setups, right? Prices always needs liquidity to move, and in this 1 minute time frame, again, I always have 1 minute time frame open, but if this is only if you just want more confirmation, right? So this is equal highs on 1 hour, we got the sweep, and then we got another SBP. So this is the actual a good confirmation on 1 minute time frame too, that price is rejecting off that high value zone. And my target is going to be now this prior swing lows right here on the 1 minute time frame. Price rejected, liquidity sweep, and lower lows and lower highs, breaking below prior swing lows, a clear SBP, a pullback again, high value zone, and and then you ride that trend to the downside, with the target of this prior swing lows right here. But with this, your risk becomes a little bit smaller. Then you can risk up to this highs right here. Again, most of the time, if I see some this setups, I take this most on 1 minute time frame. But if you are new, then this is something that you can start watching, start observing, because then it's like you identifying liquidity sweep on a higher time frame, on hourly 50-minute time frame, and then you go into a smaller time frame for just to follow these rules once again, but it's going to happen a lot faster, right? On 50 minutes, it's probably going to take a day or two, or sometimes 2-3 days for liquidity sweep to happen. But once you get that confirmation, then all you have to do is just go into smaller time frame, and then basically repeat the same thing again on 1 minute or even 5 minute time frame after price pulls back into the high value zone, and then you take your trade with this, your risk is going to be even let's say if you're not swing trading, right? If I'm swing trading, this is definitely going to be my risk, right? Because my higher time frame bias is now bearish. Now my intraday time frame, 1 minute, if I'm trading 1 minute time frame, with this my stop loss is going to be this swing highs, and my target is going to be this lows right here. And this is a massive move that you can actually catch. And this move I caught live too with members. It's a 5-point move. It's a 50-point move, right? Guys, this is SPY. This is SPY, and then I will show you a lot more examples as I move the chart forward. Right? So this happened. So now this is 50-minute time frame. So now let's move the chart forward. How I nailed the next move down after this. So this is a whole move I caught right here. So now this is the next day. So now again, guys, some things that that I'm gonna remember as I'm talking is if price is in a downtrend, you can write this down, or you can just keep this thing in your head. Is if, let's say, price wants to go lower, so this is the opening price, and the bias is definitely bearish on the day. Price is in a daily downtrend, and this is where price closed on the day. But next day we see some sort of a gap up in price. So this is the opening price, and guess what institutions or smart money does is they create that illusion of a reversal when the price actually wants to go lower or higher, right? So if, let's say, price wants to go higher, what we'll see most of the time, then you will see a small gap down on it, and then the quickly gap will get filled, and there obviously will be some sort of liquidity sweep on a smaller time frame, and then what most people think, okay, SPY opened red, it was a gap down. Now after gap fill, price should go down and all that. But on the daily chart, the price was clearly bullish, so the price pumping straight higher, creating that manipulation wick. You do not want to be part of that fucking manipulation wick, right? You always want to sell it. And this is let's say this is the daily bias. My daily bias is it's been more advanced stuff, right? So price is in a downtrend, daily is bearish. Now price opened a little bit higher, and now price is moving higher, right, in a daily bias. So obviously I'm looking for some sort of a liquidity sweep on a swing highs, and now I know the price is green on the day, and it is way above the opening price, and now it is sweeping the liquidity of prior swing highs. My first target is going to be very obvious, is SPY is going to red on the day, right? If price is a clear downtrend, that's the clear assumption that after liquidity sweep, some sort of SBP, I'm going to take my trade. My target is going to be that price is going to below the open, because that is where most people went long right off open. So price is going to go red on the day, and then it's going to stop out these, early buyers, and then price is gonna head straight to the prior day swing lows, or a swing lows that it made earlier before that mini bounce that we saw in a downtrend. So price is gonna go there. This is going to be my ultimate target, and then probably we'll see another kind of pump right here, and then price is gonna go down right here. So you never want to be a part of a manipulation wick on the on SPY, right? Especially when the price is in a clear continuation trend, right? It could be downside or up. So let me show you a daily chart, what I'm talking about, right? You've seen that so many happen. That again, you need that liquidity, you need the manipulation wick on the daily chart for price to move higher or lower, right? So let me show you this. Look at this. As price was moving higher on this, every single daily candle on here has this small wick at the bottom, right? This small wick at the bottom. This small wick is actually a manipulation wick where it stopped out all the trader. It rinsed out all the bad traders, and then this is where smart money trapped those traders in this wicks right here, and then price pumped higher and higher. And then if I show you the downtrend, it's going to be the same thing. The upper wicks are always going to be a little bit longer. Because this is where the price opened on the day, and then it wicked right here, boom, done, boom, right? So this concept is clear. I was going to explain this one, but I quickly remembered, so so I explained it to you guys. So now keep this thing in mind, right? So now back to where we were, and then how I traded that downtrend. So this is the I nailed the top right here. I also nailed the top right here. The next day, not the next day, but the same day, a clean break and retest of this setup. But if I go in a smaller time frame, I can actually show you that nothing in this market is break and retest. Nothing in this market is nothing in this market as a breakdown or break and retest type of setup. Every single time, if price wants to move lower, there will be a liquidity sweep of some type, even on a smaller time frame, but you will see it before price reversing in the opposite direction. So let's see quickly in here. Even if price consolidated sideways for very short time, for like an hour, but if I go into a 1 minute time frame, you will see some sort of liquidity sweep on the 1 minute time frame, and then you will also find the same setup that I explained to you in the 1 minute time frame too. All right, so again, I have this thing in mind all the time, and that's the reason I'm sniping tops and bottoms so casually every single day. So now you see, even though price went sideways, but if you see on 1 minute, it was clear that this was the prior swing highs right here. This was the, and then most of say, okay, this retest here, and then price is going to go down. But again, you need the confirmation to, even if you're playing break and retest, you still want to have some sort of confirmation on a smaller time frame to play that break and retest, right? So at this point, on 1 minute time frame, I see this is a clean liquidity sweep. You see price wicked above it. Again, this is not the confirmation of the price is going to continue the downside. I'm going to wait for price to break below this prior swing highs. It broke, and there is a clear lower lows and lower highs, breaking below prior swing lows. That's a clean SBP. And then we wait for price to pull back into the boom in the high value zone, take my entry, and then my target is going to be this prior swing lows, right? So this is the reason, most of my trades, I would say, 90% of my trades, they never see red. They never ever see red. And this is the only reason, because I follow these exact steps every single day, without, looking at them, without looking at, what anyone's saying on X or anywhere, right? So, or anyone, saying even in my own group, people, always talk, price should go bounce here, price should drop here. I don't make those kind of assumptions. I just look at the price, and then I just play the setup. And then most of the time, I would say 90% of the time, my trades, they never see red. As soon as I get in, they are green, or they see sideways for some time, and then the price dump, because I follow a very systematic approach. As you can see here, once you follow this kind of approach, it'd be very, very hard for you to actually take a bad trade, because you're filtering out so much noise, you're filtering out so much a bad trade, then you're only focusing on good setups, then the market is only going to present you with good setups. Again, you don't need to trade this move right down here when you can actually get in at the top and sell at the bottom, right? And then most people would sell at this bottom here, where, but if you actually know the system, how it works, you can actually get in at the top. So now how I played the continuation is so this is how I played the continuation, and how I played the continuation the next day. You see, this was the swing highs right here, and price opened, gapped up on the day, small gap up, and where it's going to go to the next swing highs. And on the 5-minute chart, I opened, boom, massive sweep right here on this 5-minute or 15-minute candle. Price tried to go higher. Now everyone's bullish. Market's up how much? Where's my product? The market's up 3 points, up 0.5% in just a matter of minutes. Now everyone's bullish. There's a massive dump in price. Now prices should go higher. But should it really go higher? Right? Look at all the time frames and see the price in a clear downtrend. No, it should not go higher, dummies. It should go lower. Easy peasy stuff. So this is also I played live with my members. Again, I told you guys, I caught this whole downtrend. Not even a single point that I missed because I followed this systematic approach. So 5 minute, a clean sweep on 1 minute. And if I see price broke below this opening day price right here, the first thing it's going to do is price is going to go below open, right? And then the first confirmation is that's the first target basically, right? And it's a clean sweep SBP on the day. And if you look at ES, always look at ES chart when you're trading SPY, because then you don't know if there will be any sort of internal range liquidity in this gap. Just because it's a gap, it does not mean it's going to get filled all the time. You always want to look side by side on the ES chart to how it's doing, so you won't get faked out, or you will just get dual confirmation on your chart. The chart is basically the same most of the time. It's just the chart is full. There's no gaps or anything like that on ES. So my bad, fucking cough. And then where it's gonna go? New swing lows, and it went straight there. Easy money again for our puts. And then where it's gonna go next is, as price is breaking below, the next target is going to be this prior hourly swing low that we identified on the hourly chart right here. That was my target, and price went straight there. And after this, all sideways action, boom, right, went down again. And this is the move that I shorted too. I also went long here at the bottom, and how I went long here is using the same method. Is this prior swing lows and price candle closed below, but on the 5 minute time frame, I was seeing this prior swing lows, price can actually sweep some of this level, and we can see a tradable bounce of that because this was the hourly swing low. And this is exactly how I played. Right after I went short, I went long again after just half an hour after getting some sort of confirmation on this 5 minute time frame. We saw price, this was the prior swing lows made, and sweep, retest of the sweep, fake out retest on that 5 minute. Price broke above this swing highs. Now this is my risk level here at the bottom, and my target is going to be this highs and this. My target was actually this highs right here, but price never went there. But again, what I explained to you guys earlier is there's always going to be some sort of internal range liquidity. And then if I go into even a smaller time frame, price rejected of this swing highs right here. So this was a clear swing highs, right? So this are lower highs, lower lows, and then look, price went to the swing highs, boom, sweep, SBP, and then dumped again. I traded this move down to, get again. You see guys, in one day, in just under 1 hour, I took 3 different trades. First I went short, caught the massive move, went long, got another bagger. And right after I went long, I took another short. Again, I did not have any bias. I just, my longer time frame bias was that it's bearish. But if I go in a smaller time frame, I caught that bounce. Then I caught this downside move too for I think 300 or 400%. It was a massive move, right? So you see, guys, once you have the system in place that what you're actually looking for, then it does not matter if you're playing upside or you're playing downside. The market is going to give you a shit ton of setups, and then it's up to you, which setup you actually want to take. And now let's go back on the 50-minute time frame. I'm going to give you guys 1 or 2 more examples of this, how I traded it. And then it's going to be the same thing again, guys, in the end, right? It's going to be the same thing. Guys, look, a small gap up, and then swept liquidity of the swing high, internal range liquidity, and then dumped to the new lows right here. It was a nice trade too, but a quick one, right? And this is a long that I traded right here. Swing lows made, swept to liquidity, 50-minute time frame SBP, end of the day long, power hour, boom, paired nicely. Right. So this is how I trade when I am trading liquidity sweeps. Again, you guys can go back test it again. You see, again, quick last one. Price gapped up, and where it went, this is the prior swing highs, internal range liquidity, swept it, and where it's gonna go? It's gonna go to this prior swing lows right here, or this is the internal range liquidity, this first one, and this external one, and let's play it. First, it went there, swept liquidity, if we bounced a little, and also gave a setup to play in a smaller time frame to dump it back down right here, right? So easy peasy move. So again, guys, if you follow this approach, and I'm telling you, there'd be it'd be so hard for you guys to lose. I mean, I don't remember when I had the red day. This year alone, I think I only had a couple of red days this year. Only solely because I probably did not follow this simple approach, and I expected a sweep, and then it did not happen, and then I took a loss. But if you follow this approach and then you wait for a sweep, and then you wait for SBP and wait for price to break below prior swing highs or lows on the time frame that you are trading, and then if you want to wait for a pullback, nice. If you don't, the risk is again definitely going to be the same. Price goes into the high value zone, and price goes into the high value zone, and then you drop down to even smaller time frame, like 1 minute or 2 minute time frame, and then you look for the same kind of things again in the high value zone. And then once you get that confirmation, and then you take the trade, and then you actually hold it to your targets, and then locking in those massive gains. Again, risk is not, again, following. If you're following a stop loss, that is just, not just you following your discipline at all. If you're not taking profits on the levels that you actually drew, that is also not a disciplined trading. So you have to follow your take profit levels too, the way you follow your, stop losses too. Only then you can take those big trades, and then you can actually have a 40% win rate, and then you can still be green on the day, even if you have a 1-to-2 or 1-to-3 to reward ratio, right? So that is that. And now the second one is pretty easy. I'm not going to explain that one. It's a liquidity pocket, and I think it's only 40 minutes. Again, you don't need that if you understand this concept. But I'm going to quickly is this is the liquidity pocket, and this moved as price saw a consolidation in this move, and then price went down, breaking below this lows here. So now this is a valid bearish liquidity pocket. So now I'm watching this liquidity pocket. If price moves back into this liquidity pocket, I'm gonna be looking for shorts again. Even if I'm looking for shorts, I'm gonna be using the same rules on a smaller time frame. If it's a 50-minute liquidity pocket, I'm probably gonna go into a 5-minute or 2-minute time frame to look for a sweep on that time frame, and then same thing, SBP, pull back high value zone, and then gonna hit my target and all this, right? I'm gonna show you quick examples on this too. Let's go into hourly, right? You see, so this move, so this was the liquidity pocket right here. And this move was, the bears were strong enough in this zone that it pushed the price to the downside. So that means there are a lot of sellers in this zone, right? So either I'm watching this zone, and then I'm watching this zone for a reversal. Price pulled back into this zone again. So either we're gonna see a sweep of these highs, or the price is gonna reverse within this zone. So there's only gonna be two scenarios, right? If price wants to reverse from this zone, now I know this is the zone where I would never ever take a long, unless price breaks above the swing highs, candle closing above now, and after this I see a change in trend. I mean, not here, my bad, right? And candle close above and then comes back down. Now this is a valid zone. This is where I would take longs, but with the SBP confirmation, then I would play the uptrend, right? So so now we know this is a bearish zone. I'm not gonna go long in this zone. So I will look for either a sweep of this zone's high, or I will look for a sweep within this zone to take a short position with this, again using the same risk, either this swing highs or this swing highs, whatever the swing is lower. Guys, with this approach, if you are trading liquidity sweeps, right, the one key thing is you can minimize your risk so much, guys, so much. Sometimes I have a 20-cent risk on a SPY move, and then I catch 4 points. That is like a free money. And then even if you catch like 20 points, that's like 1-to-1, but I catch like 4 points, or 20-point risks, just because I know where the price wants to move lower. And then this is the whole point of trading, right? If you want to be profitable, you want your risks to be much lower than you would actually take profit levels. On futures, it's obviously different. You stick to 1 to 1, 1 to 4, 1 to 3 type of rewards. But if you actually trading options, then you can catch these massive moves. You can catch these 1 to 10, 1 to 20 risk to reward trades. Because options move fast in the last, if especially if 0 dates, and then the timing is the most important thing. Once that's how the price moves. After a sweep, it's gonna go down. Then for the next, you got in, and the first next 20-30 minutes, then we see a continuation, which we do most of the time. Then there is no reason to buy 2, 4, 5 days out calls or puts, when you can actually know you can make nice money on 0 dates with a very minimal risk. So that's the whole point of options, that you have to time the price, and you have to buy the calls or puts just on time, so you don't get that burn on your contracts, right? Or even that drawdown that you don't want to see. So that's how I mainly trade. Not 90% of the time, and then 10% I would say is the gut feeling type plays that I give to my members, and then they also play out nicely, right? So 90% time I follow my rules, and then here and there I take trades with my gut, just because I have over, I think, 10,000 hours of chart time in my trading career. So any questions? Do you change anything with your sizing to prevent a big loss? This is I'm going to talk about next, is how you can actually position yourself to take benefits of my alerts. The first thing is, if you are a new trader and then you don't know how to trade, and then you don't have a system in place, and this is the whole reason that the service is here. I have my own idea that I take. Again, it's not a financial advice or anything like that. But if you see someone doing it repeatedly, day after day, and then at that point, I have so many members, they've been following me for day one, and then they still don't know how to trade. All they do is, they just wait for me alert, and they wait for the idea to pop up in the idea section, and then they follow the idea, with their with the amount that they want to risk in on a trade, and then they just follow along the game plan that I share in the intraday updates and all that. But how you can actually benefit of this service is of my trades is that's how I became profitable. Is I always follow a one position sizing across all trades, right? It does not matter if I have 2 losing trades in a row, if I have 5 losing trades in a row. I always have a same risk levels in every single trade. Any trade I'm going with, let's say if you have a small account of 5K or 1K, right? I'm gonna go, let's say, with $500 in each trade, and then I will try to follow. I will try to get in. Again, I don't take a lot of trades, but if I let's say I'm taking 3 trades, most people do pick and choose. This is a trade I'm gonna take. This is a trade I'm not gonna take. I think this is where most people lose money even after a nice alert. Is let's say in the first alert, I'm not the first alert, but in the first trade that I'm putting in $500, and then I'm taking a loss of 200 in this trade. In the second one, now I'm scared. Now I'm putting 300 in the next one, but that trade is actually a winning trade, and I'm only making $100 off of it, even though the gain of second trade was way bigger than the first one, just because your position sizing was messed up. Even if you win that second trade big, you're not gonna make enough money to recover from the first loss. So a good way to prevent that is have a consistent position sizing in all the trades. Again, I'm telling you, the day I started doing this thing, that was my first green month after I would know like a year and a half, right? Year and a half after I had my first green month, I followed this strat, liquidity sweep. I started this liquidity pockets, and then I started putting $500. At that point, I think I was only putting 300, right? $300 in every single trade, and then after 10 trades, even though I had 4 losing trades, I was still green. And then after the course of 100 trades, and then you get 70 winning trades with the same risk, and then you, even if you are taking 50% profits on average on every single trade, that'd be a lot of money. And then you losing 30 to it with a 30% stop loss on average, and then you're going to be losing way less money with the same position sizing, with the high win rate, or even with the low win rate, just because you're taking selling at 100%, and then you're taking loss at 30%. Most of the time I take a losses at minus 25 to minus 20. It'd be very rare that I average down on my trades, and it'd be very rare that I let my trades go down minus 60 or minus 70. It would be very rare scenario. Most of the time I cut my trades before 20, because if I'm following that 1 minute chart that I show you after high value zone, if price broke above the swing highs, I know there is no reason to be staying in a trade. I need to get out of your trade right away. And then most of the time my risk is 15 and 20%. And then if you're risking that 15-30% on each trade, and then you waiting for actually price to hit your target, and then you can actually make a nice money. You can actually be green. There are a lot of members that are green. There are some members who actually left their 6-figure jobs, and then they are in Discord, and then they're making, and then or Rakib is a good example. This guy, Barry is a good example, right? So these guys working for full time, and now just they trade full time, and then $1 million in trading profits, just following the ideas, just following this approach that I have. So many success stories I have. Even on average, I see you guys make $500,000 on average a day. So again, it's a system that you want to follow, right? If you want to put extra money, and that's up to you, but have one consistent position sizing on all. And then how do I scale out is, let's say I'm up 50% on a play, and price is going down to the downside, and I'm up 30%. After 30%, my stop loss is always going to be break even, no matter what. If price goes to break even and then it goes to 100%, I do not care. Once the price is about 25-30%, at that point my stop loss is gonna be on at the break even price, because I never let 25-30% trade go red. And it's not easy that you get 25-30% trade easily, right? So if my entry is perfect and my trade goes 30%, it's highly likely that it's gonna go more, and it's not gonna go back to the break-even level, because I like to trade the continuation setups, and most of the time I'm gonna get into the highs. This is where the price is gonna be 30%. Good. Sorry guys. And this is where it's going to be 30%. There's gonna be a little bit of pullback, and it's gonna go back to 15%, and then next dump is gonna go 50%. Small pump again, going back to 30%. Next dump is going to be 70%, right? So that's how the price is going to move. If you can manage these fluctuations in price, then you can actually hold your trades to hold for longer to your profit targets. And the only way you can hold is if you actually place your stop loss at break even. And second thing is takes profits. Most of the time, once price is above 50%, I take my half position out. Every single time it's like I'm a 50% on a trade, I'm taking my half position out. Even if, let's say, from here price goes back to my entry level, I'm gonna be still making green after that stop loss hit, and trailing stop hit on my trade. So I'm not, if let's say I got a 50% trade, I did not take any profits, and the price goes back into the break-even level, and then it dumps down, then I won't feel as bad if I took some profits at 50%. So I take my profits, half position I take out my 50%, and then I let ride rest of position at break even. Now my next take profit level is usually around 70 to 80%. Which if it goes 50% and after a pullback, the next move is, if it makes, is obviously going to be 70 to 80% move. So at 70-80% or at 100% move, I take my most of position out. After 100%, I am never in full side. It'll be very rare if I'm in 1/3 size, or if I took a loader position, and in that scenarios, after half, 100%, I may hold my full position. But if in my regular size, I always, I'm always, down to runs most of the time after 100%, or I'm down to 1/4, or barely 1/3 size, right? So 1/4 or runners after 70 to 80% trade. The thing is, let's say I got in with 100 contracts, in this trade. I'm going to give a quick example that how I managed the trade. So let's say in this trade I took 100 contracts, and right at 50% I sold 50 contracts, making, made some nice money on the 50s, right? So my next 50 is going to be a break even, and then the next move I'm going to hold it. I'm going to, my runners is going to most likely it's going to be 10 contracts, or 15 contracts at max, if I positioned with the 100 contracts, right? So these 10 contracts I'm actually going to hold for longer. So I'm not going to care, I'm not going to care if it goes 200% or 300% or 400%. I'm just going to keep holding it until until I see a sweep of swing lows here or swing highs or anything like that, right? So if it goes 200, maybe 300, I take another 3 or 4 out, 5 out. Thing is, because your runner is gonna make you so much money after your let's say you take your first profit here, and after taking your first profit, the rest of your position is gonna make you the most money. The first half that you took out is just just to satisfy you emotionally, in case the price goes back to your break even. You won't be you're regretting that you should have taken profits, right? So that's the only thing. But the most money that you're gonna make is rest of your position, and that's how I scaled up so fast. That's how I built my account to multiple 6 figures up there, using this approach. And then most of the time, the last 30 contracts of my position make me 2x the money, maybe 3x the money than my first position, because I know regardless of what happens, I'm not gonna be in loss, even if these profits this contracts goes back to break even. So guys, that is how I manage my positions, right? And then on the lotto side, if I wanna play a lotto on the day, so a quick math for me is, let's say I'm up $1,000 on the day. I'm up $1,000. Now I know even if I take a lotto trade, I'm not gonna be taking a regular size position, and I'm only gonna be risking 20 to 30% of my profits in the lotto trade. Maybe in the lotto trade, even if we're risking $300, my stop loss is going to be 50 or 50% or 70% in that case, right? So no matter if my lotus is going to zeros, even I'm taking 50% loss, in the end I'm still going to be up $700 to the max to end the day. And the one more thing that I want you guys to understand is that as you go on with the day, as you take more trades with, let's say market open, you took the first trade, you made a nice 50% on the day. And then the next trade, I'm not going to be taking with the same size, right? So if the first position I took with the 100 contracts, and then I made a nice money, 50% on it, and my rest of my stop hit a break even, the next position that I'm taking, I'm not going to go with 100 contracts again. I'm going to lower my position size. I'm going to lower my size in the second trade from 100 to probably 60 or 70 contracts, right? And then if I take the third trade, my position sizing is it's going to again go down from 60 to 70 to 30 or 40 contracts. The whole reason for this is once you are green on the day, you don't want to go back red. And this is the best approach. Is on the first trade I made 50%. Let's say I'm up $500 on the day. On the next trade, even let's say if I go with another $1,000 in the next trade, and then my stop loss is 50% on the next trade, and I take the loss in second trade, and then I'm going to be the red on the day. Not the red, but like at least break even on the day. And then my chances of going red on the day is much higher on the third trade. But let's say if on the first trade I made $500, and then in the second trade, instead of risking $1,000, I'm going to risk 500. So my stop loss is going to be 250. So on the 250, if I take a loss, I'm still going to be up 250 after the second loss. So a third trade I'm taking is going to be, with, let's say, instead of 500, I'm going to be taking 300. And then 300, I make, extra $100 on top of that. Now I'm going to be up again $100 on the day. So if I as the day goes, as I take more trade in the day, my position size goes lower and lower after each winning trade, right? But if I get a loss on the first one, then I keep position size the consistent less. The max loss I takes on the day is like 2. If I'm taking 2 losses on a day, I know it's not my day. I'm not gonna force it anymore. I'm not reading the price action, so I walk away after 2 losses every single time. If I get, that's rare, but if it happens after 2 losses, I walk away, and then I don't look at the market, until the last hour if I want to take some dodos or anything, right? But I come back the next day with a fresh mindset, and then I take the trade, and then I follow this approach day after day and day after day, and then here I am trading live in front of you for almost 4 years now straight. And then the only reason that I'm surviving in this market because I'm literally following this exact setup on the chart that I showed you guys. Liquidity sweeps on 50-minute hourly time frame, SBP, high value zone pullbacks, and then holding my trades to, the first target is going to be internal range liquidity. The ultimate target is going to be the external range liquidity. So this is the setup that I have, made on the chart that I need to follow, and the system that I just told you, which you cannot learn anywhere, is the mental discipline that I built myself. For me, and then for my trading account, these are steps I need to follow in order to stay profitable by end of the day, by end of the week, and ultimately by end of the month. And end of the month, and you or even end of the week, you take withdrawals, withdraw your money, reset your account, and then play that same game again and again and again. And once you have 3 months of profitability, once you are up 3 months. You're in profit, at these 3 months I'm making nice money. Now it's time to size up, really, because if you can go 3 months green in a row, then you're in top 5%, right? So once you're in top 5%, then you don't want to stay in top 5%, then you want to go in the top 4%, top 3%, then you're going to top 2%, right? So that's how you want to level up. And then how you want to level up, you can, even at this level, let's say if I'm trading 200 contracts on average on SPY now, right? So even if let's say tomorrow, the market opens and I, go with the 500 contracts, I'm still going to take a loss, right? It's just because my mental discipline might not be as strong for 500 contracts as, it is strong for 200 contracts, right? It's again, you scale up like this. You can never scale up, 2x, 3x in one day, right? So first 3 months, let's say you're playing with $1,000, and then 3 months, same position sizing, you're following your risk, all this stuff. 3 months you're green. The 4th month that I'm gonna scale up by 20 to 25%. So now I know that I'm risking $1,000. Now I can risk $1,300 on each trade. So now after, now my risk is same, approach is same. Now you can actually handle more risk because you have more profits to play with. Now these things, you were green for past 3 months. Now you can actually take more risk, and then your mentally is gonna be it's gonna be too strong after those 3 months. I'm telling you, right? And then you obviously gonna have more confidence in your trade, so you can actually scale up. And some people scale up after 2 months. I think 3 months is a good average that I give myself a time, that if I wanna play around with my positions, 3 months is the minimum maximum time I give myself to play with the same size. And then from 500 you can go up 20 to 30%, and then from 1,000 30%. Now I'm playing with $1,300 for 2 months straight. I'm playing with $1,300. Now I'm profitable again with this one. Now the next 2 months, I'm gonna bump it another 20, 30% on, and then within 6 months, you are going from $1,000 position size to almost $1,600 to $1,700 position size. That's a 60 to 70% position size increase in just under 6 months, just in 6 months, right? And then you can see how much. And then again, if the more people that you see when you listen to their trading, be like they were losing for a year, and in 1 month they became profitable, is because they follow this approach. And then once you understand this approach of scaling up, then it's a snowball effect. In the first 6 months, you went up from 1,000 to 1,700 to 1,600. In the next 6 months, then you're gonna be sizing up almost 120 to 130% of your original position size a year ago. That's a massive difference, right? A year ago you were playing with $1,000. Now a year later you're playing with 2.5K. You're making $500 profit on the day on a $1,000 position. Now you're on $2,500. You're making almost a 50% profit on average. If I see, that's a $1,300 you're making on average on each trade, right? So you can scale up really fast, but you have to be patient. You have to, give yourself time. You have to, follow the mental discipline yourself. Only then you can scale it. On charts, it's pretty easy, the stuff that I told you. But most people fail when it comes to position sizing, risk management, and all that. And I have a really good example. I don't want to name anyone, obviously. This guy messaged me. It was like, it was, I think last year, back in January. It was like, Bull, I deposited $20,000 in my account. All I'm gonna do is follow your alerts. I was like, your account, your rules. I know I don't make the rules. So this guy went from 20K. I have the screenshots. This guy, kept me updated, to this whole process. $20,000 to $55,000 from January to April. In just 3 months, when 50 massive amount of money he made. I told him to withdraw the money. He's like, he want to size some more. What he did wrong was, he was going slowly in those 3 months, and then it's not like he traded on his own. He was simply following the alerts. He was simply following my option ideas and all that. All the losses he were taking, good losses he were taking, and he was holding the trades as I was holding, right? So he was, he never missed a single trade. Just go on a screen 6:30, clogged in. If Bull's giving a trade, I'm getting in. If he's not taking a trade, I'm not taking any trade on my own. Was not an experienced trader. Only 8 to 10 months in the market. From 54K, he tried to size up. Now he thought he had a lot of money. He can size up. From 54K, then he started taking his own trades. And then from 54K, he went back to 20K within fucking 20 days. In the start of April, he sent me a screenshot of 54K. End of April, he's sending me a screenshot, Bull, and back to 20K. Now his psychology is messed up. He did not take profits. He did not follow rules. He lost so much money. He lost 3 months of profit in a span of 20 days. What was the next? I told him, if you do not start following the same rule that you were following before, then you're just gonna lose the 20K too. Have the messages, so it's everything. This guy did not listen, kept on sizing up, thought it's possible now to go back to 54K in that time, lost 20K, took a loan of 25K line of credit. Now that he blew up 2 months ago. Now he's not trading anymore. Right? He's like, Bull, give me a free month, give me this, that. This guy's been in a free premium for almost, 6 months. I think it's free. But what's the point of it? If you're not gonna follow the risk management, you can actually scale from 20 to 60K in 3 months. And if you follow the same risks, you can actually go from 60K to 100K in the next 3 months, right? And then you go from 100 to 100K in the next 6 months. But it's the greed, it's the end, it's the risk, it's that you people that don't want to follow. Once the level of green, they want to size up real quick. That's not how it works. Even if you make $200 a day in trading, you're still in top 5%. So let's stick to that. Follow these rules, follow this approach, and I'm telling you, no one can stop you from becoming profitable. It's your own fucking mind that you just need to get a control of, and then follow the system, obviously, right? And then you're going to be profitable in no time, right? I learned these things after so many errors, after so many trials and errors. So you're like, okay, this is I need to do. This is the discipline that I need to follow. I lost all my life savings, just learning this one trading model that I explained to you. And also on top, there's the emotional side of it, right? How you're gonna manage it. I also learned it after losing my all life savings, and built it back up. Here I am now, trading live every single day in front of you, taking profitable trades too with a massive win rate, and also not just fucking scalps of 10, 20, 30%, but a massive back-to-back baggers every single play, every single day, and then multiple times a day. Just because I have a system in place. I have a position sizing system in place. I have a risk management system in place. And then on top, I have a confidence and conviction in my position sizing, in my risk management, and my the trading model that I developed, that I literally explained to you for the first 40 minutes of this video. So now I think that's a wrap for it. If you are in the premium and you're following, this is the approach I would follow. Let's say if I'm following someone and the guy is profitable and making real money, giving me trades every single day, with the screenshots. I don't think anyone in the market. I only know a couple people, that actually gives you trades with their screenshots on, especially on SPY. And then once they are up, they tell you I'm getting out. This is where I'm taking out my positions. And the big thing is, I think this is no one probably does it. That I always give the game plan ahead of the time. This is I'm watching, and then I get into the same play, later in the day, because I am always prepared. This is what I'm looking at: swing high, swing lows. So once if I follow someone like this, then I obviously will follow the approach that I literally explained to you, and then there be no stopping of you becoming profitable. Again, most of the members did the same thing: Rakib, Barry, multiple other people. So go ahead, once you're profitable, obviously once take trades, once you know how I trade, you obviously gonna build your own system around my trading model, right? And then in the matter of 3-6 months, you are definitely going to see some green in your portfolio. I know many of you are already making nice money. I get more good messages every single day. You guys posting profits too. I see it. Those who posting profits every single day, those who are profitable or not, I get messages every single day, good messages. Those people just follow the trade, and then those who just follow the system in general. You can be the one, but again, you have to follow the rules that I explained to you in the last 1 hour. This class is going to be recorded, and then I'll upload it once I'm done, so you can go ahead and watch it, take notes. A lot of things that we talked about today, so I'm going to quickly go over those, and then I'm going to stop recording. After stop recording, I'll take some Q&As. So quickly wrap up on how I what I explained today. The first thing was the my trading model, which is I call it PSS model right here, which I explained to you in detail, showed you so many examples how you played that whole downtrend. And then the one thing that I was pretty advanced is how the manipulation occurs in the market, how the manipulation wicks occurs in the market, and then how you can save yourself from this manipulation wicks off open, or just in general, even not of open, but you just want to save yourself. If your bias is clear on the daily, on the hourly chart, then these manipulation wicks on the smaller time frame should not fumble your conviction or confidence in taking any type of trade. But you should be ahead of yourself, ahead of the markets, and expecting that move, and then be ready to pull the trigger when it happens. Right. So manipulation wicks and all that, I went through a lot of examples. Either it was a liquidity sweep to the upside or a liquidity sweep to the downside, internal range liquidity, or external range liquidity, right? Right here. And then I explained, went over my position sizing, which was very important, very, very important. I think one of the key things if you want to become profitable, consistent position sizing in every single trade. Then even if you take 6 losses out of 10 trades, but you're taking 1 to 3 reward on every 4 trades, you're going to be profitable in the end, right? Position sizing I talked about. Risk management is definitely the key thing. I explained to you how you can manage your risk by taking a very low risk trades using liquidity sweeps. The whole reason that we wait for sweep and SVP to happen, so we can have a proper risk level for our trades, nothing else. Because thing is, before you get into a trade, your first goal is to have a risk level, and then you look at the where you're going to take some profits. If you don't have a risk level in place, your trade is it's not going to work out, right? So risk management is the main thing, and then how you can get past that emotional side of the trading. I explained that too, right? And then the scaling up, how you can scale up fast. What's the method to scale up? Use that, and then once you follow all these rules, you are definitely gonna be a profitable day
trader in the end, right? Just these are very simple rules to follow. And I don't think if you're a smart person, if you have a brain, it's hard to follow this type of rules. It's only when the greed comes in, and then you just want more from the market, only then the market fucks you over. Other than that, if you stick to your trading model, first step is checked, and then the ins in the out of the market, manipulation, wicks, inside, and all that is you're gonna be good. And the second thing you got a hold of is the position sizing, risk management, and then scaling up is comes in the last, and then the profitable trader, you're gonna get a tag of it. Easy, right? If you're smart enough, if you have patience enough on yourself, that don't want to take a random BS trades, then you definitely be in that 1% category. And then once you are in that category, the good thing is, once you're in that category, there is no going back. You learned the system, you mastered all this, and then there's no going back, and there's only one way from it, and there's only up, right? Only up, right? If you're profitable the first year, you're gonna be 3x. You're gonna be the 3x the money the next year, and you made the money for 2 years. And guess what? You're gonna make even more money in the third year that the money that you lost in your trading career, and the money that you made in the first 2 years, and the fourth year. And then you're gonna be hitting the skies, right? So this is a niche that can pay you for the rest of your life. And then once you master all this, after taking some 6 months or a year, and without doing any fuck ups, you can definitely be in that category and gonna stay in that category until you close your eyes. So with that, I'm gonna take a leave, and then hope you guys learned something new. If you did, please subscribe to the channel, Bull's Corner, and then I will catch you guys in the next video. Have a good day, everyone.